Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, America's trade partners race to seal deals with 48 hours left before President Trump's deadline.
I did. I signed some letters, and they'll go out on Monday, probably 12.
Looking for catalysts, Philippine investors hope for an established deal with the U.S. or more signs of easing from the Bangko Sentral. And the elusive search for the World Bank's upper middle income country status. But what will it really mean for the Philippines and Filipinos? We speak with J.C. Punungbayan, Assistant Professor at the UP School of Economics, and John Paulo Rivera, Senior Research Fellow at the Philippine Institute for Development Studies. Countries without a trade deal with the U.S. would see their tariff rates revert to April levels starting August 1st. President Donald Trump is sticking with his July 9th deadline for nations to forge a deal with Washington. Without one, the White House will send a letter notifying of higher import taxes. July 9th marks the end of the 90-day tariff reprieve, with Trump setting an initial goal of striking 90 deals. So far, only China, the UK, and Vietnam have walked away with agreements. Other countries are lining up to ink a trade pact, including the Philippines, which sent a delegation last May to meet with U.S. Trade Representative Jamieson Greer. Palace Press Officer Claire Castro said last Wednesday that the country is ready for any outcome of the tariff talks. The announcement of August 1st gives some breathing room for U.S. trading partners to continue negotiations in the hopes of avoiding tariff rates set during Liberation Day on April 2.
They're going to be tariffs. The tariffs are going to be the tariffs. I think we'll have most countries done by July 9th, yeah. Either a letter or a deal.
But they go into effect on August 1st. The tariffs go into effect August 1st, but the president is setting the rates and the deals right now.
By telling our trading partners that they could boomerang back to the April 2nd date, I think it's really going to move things along the next couple of days and weeks.
Philippine shares may get a lift this week if the country secures a trade deal with the U.S. before the July 9 tariff deadline. Investor sentiment remains cautious, but PhilStock's financial research manager Japhet Tantiangco says any breakthrough or even a deadline extension could boost the market. Last week, the PSEI fell by 0.2% to 6,395, weighed by supply pressure and a slight rise in June inflation to 1.4%. Tantiangco said potential rate cuts from the Bangko Sentral ng Pilipinas following softer inflation could also support the market. For his part, RCBC Chief Economist Mike Ricafort said immediate support for the index is seen at 6,100 to 6,300, with resistance at 6,500, a level the PSEI may continue testing this week. Another potential catalyst, June inflation coming in below target, giving the Bangko Sentral ng Pilipinas more room to cut rates. But global risks and U.S. policy shifts could affect this outlook. Finance Secretary Ralph Recto says the lower-than-expected June inflation print provides more room for the BSP to further cut policy interest rates to help boost consumer spending and drive in more investments. BSP Governor Eli Remolona also sees room for 2 more rate cuts this year after the 25 basis point rate cut in June. Economists expect inflation to stay below 2% in the next 2 months, with rice prices continuing to ease, but warn of risks from the typhoon season and global price shocks. Analysts also say the Fed's next moves will be crucial. If the U.S. delays its rate cuts, it could weaken the peso and limit the BSP's room to maneuver. The Philippines fails to scale upper middle income country status after coming up $26 short of the minimum threshold by the World Bank. But what does it really mean for the Philippines and Filipinos? With us now for more is J.C. Punungbayan, Assistant Professor at the UP School of Economics. Good to see you again, J.C. Welcome to the program.
Thank you very much, Cathy, for having me.
So we're still in the lower middle income country status in the latest World Bank assessment. We've been in this classification since the World Bank began tracking countries this way based on income since 1987. And the government's been promising upper middle income status since 2017. So what's the big deal in this round?
Well, the government is hoping that we should finally cross the threshold because we've had that category for almost 40 years, as you mentioned, and we're tantalizingly close to crossing the threshold by just $26 of GNI or gross national income per capita. However, I wouldn't put too much stock on this label because it really means little by way of implications for the ordinary Filipino. And it's much more important to focus on the key drivers of the Philippine economy because of the pandemic, for example, that pulled down the trajectory of the economy and the global headwinds that we're facing right now. Even the government has admitted that its target of previous target of 6 to 8% might not be so feasible anymore, and they downgraded their own target. So we should focus on how we could jumpstart the economy once more.
Yeah, I like the word that you used there, tantalizingly close. If we just work out the maths, because it is total national income divided by the total population. If you just work out the current population of about 115 million or so, then how gravely short is the Philippines in total national income?
Well, if you do the math, then we're still short of about $3 trillion based on the specific definition of the World Bank, which is the Atlas method, which they use to make incomes across different countries comparable. I would also would like to point out that Vietnam is actually even closer to achieving upper middle income country status. They just missed the threshold by $6 of per capita income. So they have more reason to be tantalized.
Right. In fact, as you can see here in this graph, just to be fair, it's the closest we've been to upper middle income country status at just $26 off the minimum threshold. Previous years in the Philippines was triple digits short. What do you make of this narrowing gap as we're looking at Vietnam as the next best competitor for upper middle income status?
Well, we should give credit to our own country because even if we kind of keep missing the threshold, per capita incomes in the Philippines have been increasing, definitely. But the problem is the threshold is also moving over time because of the World Bank's idiosyncratic definitions or methodologies. So at the same time that our income is increasing, the threshold has also been increasing. But so again, I would like to emphasize that maybe we should focus on our attention on how we can jumpstart the economy and accelerate growth. Because before the pandemic, I note that it was quite easy. And in fact, most people expected the economy to achieve at least 6% growth year in, year out. However, that's become a lot harder these days. Because the pandemic definitely pulled down the economic trajectory of the Philippines. In fact, if the government wishes to go back to the pre-pandemic trajectory, I did the math on this, and we'll need growth of at least 10% per year, which now looks definitely impossible. So we seem to have moved on to this new and lower growth trajectory.
And our other competitors in the ASEAN have moved forward. We could have been rubbing elbows by now with the likes of Indonesia, Thailand, and Malaysia. Just take a look at that chart. I know it's a little bit busy there, but just take a look at the red line. That's the Philippines. And we're right at the lower level of the part where upper middle income club in the ASEAN begins. But we're not. Why not, you think?
Well, this goes to a bigger discussion of how the Philippine economy has underdeveloped in the region since the 70s as well as the 80s. We had the crisis in the mid-80s, and then more recently we had the pandemic. So there were definitely a lot of missed opportunities over the past decades. But if you go back even further in time, you will see that the Philippines actually used to lead the pack. So we were one of the richest countries in the region. In fact, even richer than Malaysia back in the 1950s. But they overtook us since the 60s and the 70s and so on. We need to look for those growth drivers, whatever they may be, and focus our attention on how we can accelerate growth in those sectors.
Maybe we can look towards Vietnam. Our neighbors' master class in teaching us lessons. If we just tease out the purple line here and represent the graph again, and see that Vietnam, which is just $6 away from upper middle income status, as you mentioned earlier, just see that steep trajectory up. That's the purple line there, and that's Vietnam. Compare that with the red line, which represents the Philippines. So what can we learn from Vietnam? As it's practically, as you said in the column, it achieved in half the time what the Philippines has been aspiring for nearly 40 years.
Yes, Vietnam has been a rising star in the region, and despite being a socialist economy, actually they're very market-oriented, and I think that's one of the reasons for their accelerated growth. They have been quite liberal, for example, in terms of attracting investments. Now Apple, as well as Samsung and other big companies have chosen to locate in Vietnam in a way that the Philippines is kind of struggling to attract these big investments in the region. And then at the same time, Vietnam has been an export powerhouse. They're quite strong in electronics, electronic products. For example, they can produce entire laptops, entire smartphones, even electric vehicles in a way that we can't. Their liberal attitude toward investments has been a key driver of their growth, and I wish we could emulate the same here in the Philippines. However, there are several restrictions that remain beyond the legal restrictions. In fact, if you just look at our laws, we're quite liberal, actually. But what's turning off investors would be other things. For example, high taxes, for example, high cost of power, the weak rule of law. So we need to fix these things so that we can begin to achieve or emulate some of the success of Vietnam.
Yeah, but we wouldn't want to emulate Vietnam and catching the ire of Trump. Trump last week claimed that he's made a deal with Vietnam and that he intends to impose a steep 20% tariff on things that Vietnam sells to the U.S. It's quite a big improvement from 46%, but where does that put us then at, let's say we finish up with 17%?
Well, yes, definitely that's a red flag in terms of Vietnam's growth. Some people think that there may be some trade that may be diverted toward the Philippines as investors, for example, investors look for countries they can locate into that are not so much exposed to Trump's tariffs. However, again, that goes back to the original point, which is the Philippine economy attractive enough? Even notwithstanding the tariffs that Trump is imposing on many ASEAN economies that over the past several years have exported a lot of goods to the U.S. And in fact, when you look at the list of countries ranked by the tariff rates that Trump wishes to impose on them, ASEAN actually figures very highly on that list. So in a way, our underdeveloped economy, as well as our lower exposure to trade with the U.S., has kind of shielded us from Trump's ire, from the worst of Trump's ire. But that's not saying so much. In fact, I would say that Trump's targeting of Vietnam is a reflection of their success. And I mean, that's a credit to Vietnam's economic development over the past decades.
So our policymakers have a lot of homework to do after your column, but thank you so much, Professor. Really appreciate the insights. JC Punongbayan of the UP School of Economics. In corporate news, Meralco Power Gen is moving forward with plans to list its renewable energy arm, M-Green, via backdoor listing through SB New Energy Corporation, or SBNEC. Rather than going the IPO route, M-Green will transfer its assets to SBNEC, which is already listed, to speed up its entry into the stock market and scale up its renewable projects. Meralco Chairman Manuel V. Pangilinan says they hope to close the transaction within the year, along with the name change for SBNEC. M-Green currently has nearly 400 megawatts in sellable renewable capacity and holds interest in Terra Solar, developer of what could be the world's largest solar and battery project. The move aligns with M Green's goal to build a 1,500 megawatt green energy portfolio as SBNet continues to expand partnerships and capacity. You're watching Money Talks. Coming right up, a massive flooding in Texas kills at least 69 people. And a report says TikTok is building a new version of its app for users in the U.S. ahead of its planned sale. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. 8 members of the OPEC Plus have agreed to accelerate oil production in August to 548,000 barrels a day. The oil producers group met for the first time since the Israel-Iran conflict erupted in June and subsided 2 weeks later. The output hike is seen as a move to please Trump, who has been demanding the group to pump more to keep gasoline prices lower. The increased production will come from Saudi Arabia, Russia, the UAE, Kuwait, Oman, Iraq, Kazakhstan, and Algeria. Benchmark Brent is currently sitting at $67.65 to a barrel, down by nearly 1%, while West Texas is trading at $65.85 to a barrel in after hours. S&P said the price of Brent could fall to a range of $50 to $60 a barrel later this year and into 2026. The same goes to West Texas, which could decline to $50 a barrel. Stock futures slide as the Trump administration moves to the goalpost on tariffs again. U.S. markets set to resume trading later tonight, Manila time, after Friday's Independence Day holiday. The Dow declines by nearly 0.25%, S&P 500 tumbles by nearly 0.25%, and the Nasdaq falls by 0.4%. Asian markets opened the week mostly higher in the first hour of trading. The Australian ASX 200 up by less than 0.1%. Kospi Index climbs by nearly 0.33%, and Japan's Nikkei 225 down by 0.4%. Let's take a quick check on our own markets, with the Philippine peso opening Monday weaker, 56.48 to the dollar. The peso depreciated last Friday to 56.40 against the greenback. As for the 10-year government bond yields, they fell to 6.235% on Friday from the previous close of 6.276%. As for the Philippine Stock Exchange Index, it is higher at the get-go, opening at 6,403, up about 0.1%. The local bourse tumbled on Friday by 1.1%, with the broader all-shares index also on the decline by 1%. All sectoral counters were in the red, while total value turnover thinned to 6.62 billion pesos. Fundamentals-wise, the local stock market is still deemed undervalued, says Japheth Tantiangco of PhilStocks Financial. The index starts trading this week with a PE ratio of 11.6x. Now, this is below its 5-year historical average of 17.3 and the regional average of 16.4. carry on our conversation on incomes, inflation, growth, and jobs. With us now for more is John Paulo Rivera, Senior Research Fellow at the Philippine Institute for Development Studies. So good to see you again, JP. Welcome back to the program.
Good morning, and thank you for having me again.
Yeah, so what do you make of what JC said there? A lot of focus, dogged focus on becoming upper middle income status. Are we looking at the wrong metric here?
Well, I totally agree with Dr. Punong Bayan's assessment of the achievement of the UMIC, but then I would like to take it from a governance perspective so that we can totally achieve that UMIC regardless within the year or in the short term. So the thing
is there a lack of governance?
What I mean is we have to look at this from a different perspective. We have to find ways of doing new things, no? Making improvements that's different from what we're currently doing so that we can expect something new from the behavior of the economy. Rather than insisting on this policy and that, maybe it's time to recalibrate because the report on the UMIC is actually a rallying call for structural reform so that eventually we can catch up and totally and finally achieve that UMIC status.
Well, to be fair, the government's already revised its growth forecast range for the year. So they've come down to what people think might be a more realistic 5.5% to 6.5%. Would that be a good start?
That can be a good start. And the reality now here is we have to be very deliberate with the programs, with the policies so that the value added, the multiplier effects of government project, government spending, even investment spending, even consumption can truly materialize, boosting this economic growth to $1 trillion, right? That is still the shortfall that we have to achieve that upper middle income status. And with the power of the multiplier effect, then we can eventually close in that gap.
Benign inflation could have been a no-brainer, but when you check at the wet markets, as we did last Friday when inflation figures came out for June, people are still complaining they can't buy more for less. Even as inflation's remained at lows that we hadn't seen since November 2019. So where is the disconnect there? Why are people still complaining when we just remind them, recall June of 2024, inflation was at 3.7%, way double than what we have right now.
Well, that's the thing about inflation, because even if inflation is slowing down, we are not actually experiencing deflation, which means that prices remain to be high, but their rate of increase is actually slowing down. In short, prices are still expensive, but then the rate at which it is increasing is actually slowing down.
But is that a fair point to make, though, when you think about the cumulative inflation that we've experienced during the pandemic, then we're trying to work that off.
Yeah.
Are we then not working it off fast enough?
Well, we're trying to manage inflation so that it will not spike up significantly, putting more pressure on consumer purchasing power. What we're currently doing now is trying to manage so that it does not add further burden to our consumers by managing it to a rate at which our consumers could still manage, and that the rate at which income is also increasing is being matched by this increase in inflation.
So we're getting to interest rates now. Is it more monetary policy maneuvering here or price checks? I mean, where's the low-hanging fruit to get that inflation at a level that people might want to spend more and can spend more for less?
Well, our monetary authority, even our fiscal sector, have been working together to be able to achieve that balance so that the economy can still grow, inflation is managed, and that consumers would still be able to afford things. However, the downside risk or the headwinds, particularly in the international market, continue to threaten this economic management.
Could it? Vietnam, could it be a big threat? I mean, right now they've come right down to 20%, according to Trump, and that's like a 3% gap we have there. If indeed we end up at 17%, would that be a place that we could say that we are less competitive?
Well, the gap may be material, but then it boils down to the way transactions are held, ease of doing business, ease of doing trade between the Philippines and Vietnam would actually matter given this differential in tariff rates.
All right, so that's internal, external risks, and we've come right down to what you said at the start of this chat, governance. Where's the low-hanging fruit? Where do we start with governance and trying to do things differently in the last 3 years of the administration?
Well, the literature is very clear that political risk actually generate economic risk. That's why there might be a need for us to be able to manage political noise by diverting attention, resources on economic affairs that would truly matter and create value for the economy.
How's that? How do we do that? And who actually does it?
Well, I mean, every one of us, the Filipino people, government, private sector, it is a whole of economy approach that we have to project an image of the Philippines that it is investment worthy, money is worth investing here in the Philippines, and that there is policy continuity. So that I know that as an investor, putting in money in the Philippines would be value adding, it would be productive, and therefore we can generate expenditures, we can generate income that will allow the economy to grow towards upper middle income.
Well, not when you think about what JC said there, the fears of any investor coming in, doing business, ease of doing business for one, taxes are high, high power costs. You know, these are issues that have to be addressed, and they're not new issues. They've been there for the longest time.
True. That's why it's very timely to address them by reducing these political instabilities, reducing political noise, reducing issues that actually hamper us from actually focusing on issues that truly matter.
So what then is the role of the economic managers? I mean, there has been a cabinet reshuffle, a revamp. All the economic managers have been retained. What can they do at this point to actively contribute to what you're saying of a change in governance in order to push things forward?
Well, for the economic managers, they can actually reinforce the structural reforms. The Philippines has been making significant strides in relaxing constitutional constraints that would allow more investments or liberalize investment environment in the Philippines. We've been doing that. No? We have started that, but the implementation would have to be strengthened, particularly in the ease of doing business, particularly in infrastructure spending that will allow mobility, ease of mobility in and out of the country, allowing investors to have comfort in actually being in the Philippines.
We have about a minute to go, and the State of the Nation address comes to us at the end of this month. What would you like to hear from the President?
Well, personally, I would like to hear emphasis on enabling those reforms happen in the next 3 years. I understand that 3 years would not be enough for those structural reforms, but it is very important that they get started now.
And hopefully it's not too late. We got 3 years to go.
Yeah.
All right,
Thank you.
Thanks for that. JP Rivera of PIDS. Here are the headlines from around the globe. In the U.S., at least 79 people are confirmed dead from floods in the state of Texas. Over 800 have been rescued from the flooding that occurred when the Guadalupe River broke its banks after torrential rains in central Texas. At least 41 are still missing, including girls at a summer camp. The National Weather Service warns of more flash floods with thunderstorms expected. U.S. President Trump says he will likely visit Texas on Friday. Pope Leo XIV has offered his condolences for the victims of the flooding. Meantime, Trump says, quote, it's ridiculous for billionaire Elon Musk to start a new political party. In his social media platform X, Musk announced he'll establish America Party that would seek to challenge the existing two-party system. This further strains Musk's relationship with Trump, whom he supported in the 2024 elections by donating $288 million to his campaign. The Tesla founder has grown disenchanted after Republicans passed Trump's marquee legislation that he claimed would increase the budget deficit and make America bankrupt. And still in the U.S., TikTok is building a new version of its app tailor-fit for American users ahead of a planned sale to a group of investors. According to tech outlet The Information, TikTok will launch the new app on September 5th. This comes as Trump moved to September 17th, the deadline for China-based ByteDance to divest TikTok's U.S. assets. The current version will only work until March 2026, so American users will have to download the new app to continue using the service. And before we go, Legoland Shanghai Resort, now the world's biggest Legoland, has officially opened in China. Spanning 318,000 square meters, the resort features 8 theme zones with over 75 interactive rides and attractions built using more than 85 million Lego bricks. Legoland Shanghai is the 11th Legoland in the world and the first in China. It's built by Merlin Entertainments and the Lego Group in partnership with the Shanghai government. The park showcases Lego recreations of Chinese landmarks, including the Forbidden City, the Bund, and the ancient water towns, with some built inside the 26-meter tall Lego figure named Dada. Well, the result also includes a 250-room Lego-themed hotel and a commercial complex with over 120 shops for a full entertainment experience. No dismantling that. It's Legoland in Shanghai. That it is. For Money Talks, Cathy Yang catches again tomorrow 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.